Louis, I would say that if you never buy investments with borrowed money, you can always be comfortable. Human nature is such, we're always going to have periods of enthusiasm and pessimism. Every 10 years, there'll be bull markets and bear markets. But if you don't have borrowed money, you don't have anything to worry about.
Bill, you tell people not to panic. Do you tell them to buy?
Well, I think sure. I think it's time to, after a week like this, it's a good time for everybody to look at, as they are now doing with American corporations, restructure their portfolios. Good time to take a look at what they have and what they might take a look at to improve their portfolio in the, in the weeks and months ahead.
Why didn't you warn your customers this was coming?
Well, I didn't know it was coming, Louis. I think if I had to describe the event in a short period of time we have here tonight, somebody asked me about it, and I said it reminds me of the total eclipse of the sun. All the various negative events that Steve talked about and others have this week all sort of came together at the same time. And that led to the incredible activity and the decline on Monday. But like an eclipse of the sun, it doesn't happen very often when it's that total and doesn't last for very long. So that's kind of my simple analysis of it.
Mm-hmm. Let me speak to the customers. Merrill Lynch gained its reputation as the firm that brought Wall Street to Main Street, as the champion of the individual investor. These days, you've got a lot of other activities. In fact, you're one of the principal users of this so-called program trading that was so controversial this week. Let me just read you a letter I got this week. It ends with a question. I'll let you answer the question. It's from one of our viewers, Barbara Navarro in Chicago. She says, what political body or government agency could we write to suggest that a separate exchange be created for those not engaged in computer big block program trading? The little guy doesn't have a prayer, as evident on Black Monday. It's a shame that the supposed free market system, which has always been part of the American dream, has to be dictated by computer wars. What can be done for the small investor?
I think that's a very good question. And as a matter of fact, before I answer that directly, or try to answer it directly, I would say that I don't think anybody should blame the decline on Monday on computerized trading. To me, it was simply the match in the gas tank that exaggerated to the extent that it did. All the other things were there. All the other uncertainties were there, and computerized trading was simply the tool, the mechanical tool that caused it to go to the extremes that it did. I think that she can write to people. She could write to the SEC, who were asking for a review of it. I know that the New York Stock Exchange has had a thorough study of computerized trading. That's going on for a couple of months and it's due to be released in, I think, the next 2 or 3 weeks. But I think before we're too hasty to jump to a conclusion about computerized trading or program trading, that we ought to let a little cooling off period, let the dust settle, and really find out. Now, as for bringing Wall Street to Main Street, I think you know how all of us at Merrill Lynch feel about that. As a matter of fact, it's kind of ironic. Monday, the day of the big decline, was the birthday of Charles E. Merrill, our founder. And he must have been rolling around thinking about some things himself on that particular day. But we're still a champion of the small investor, and there's so many things that are right about it that we just can't let one unusual event mar the whole atmosphere.
Steve, you mentioned that Wall Street's tolerance was not unlimited in these economic areas. The old story is, with a mule, you start by hitting him with a 2x4 to get his attention. Do we have the government's attention?
I think absolutely. I think it's no surprise after a 500-point decline on Monday that President Reagan, for the first time, opens up the opportunity for tax increases to help narrow the budget deficit. It's no surprise after a day like Monday that the West German finance minister and central bankers allow for lower interest rates. No surprise that Alan Greenspan suggests that he will provide all the liquidity the system needs to grow. We have the attention now of the policymakers.
In 1982, the big bull market started right after they passed a big tax increase. Is that all you Wall Streeters want, more and more tax increases?
No. I think rather than a tax increase, what Wall Streeters want, so to speak, is a sound economic policy. And an element of that sound economic policy would be a balanced budget, or at least a budget deficit that is moving to a lower number.
They're talking about a $23 billion increase in revenues. Is that really going to turn around this multi-trillion-dollar economy?
No, and I don't think anybody expects it will, but it's a move in the right direction. I think all Wall Street would like to see is progress made on the budget deficit, progress made on that deficit will help us improve our trade deficit and will also make us less reliant on foreign savings to fund our financial markets.
When you were here in April, you predicted that the Dow this year would get to 2,700. It did? Was it just tired and ready to go down?
I think it was more than just tired. There were some underlying fundamental deterioration, and that deterioration began in the summer months of this year. First and foremost, interest rates began to rise, and the level of interest rates became competitive with common stock returns. Second, stocks had achieved a terribly unusual level of value relative to earnings, dividends, and book value. Third, liquidity in the system, money available to buy common stocks, had declined. All of those things were going on underneath the market. It took something to bring investors to focus on them.
John Templeton, the newspaper Variety, recalled its famous 1929 headline this week. They said, "Wall Street lays an egg, the sequel." You were around in 1929, although you weren't as active as you are today. What's the comparison?
The panic this time was much greater, much larger. But at that time, the stock market would have recovered within a year, except that the panic spread into general business conditions. And that I do not expect this time. Things are so different. At that time, there was no unemployment insurance. There was no guarantee of bank deposits. There was no insurance on brokers' accounts. There was no Social Security, and many other factors. So that this time, I think this is simply a stock market, a bear market in the stock market, and will be reflected in little, if any, decline in general business.
President Reagan last night seemed to be at pains not to say we would not have a recession. He said if we lost confidence, if Wall Street's mood spread to the country, that we could have a recession earlier than we might. Does that worry you?
No, that is about the same thing as was said in 1929. But it's also said with every other bear market which has not increased in spread. It was said in the bear market of 1937 and 1942 and 1974. And usually it's true that nothing will happen this time except a temporary decline. I would go as far, Louis, to say that I would be very surprised if there is any decrease at all in the amount of dividends paid out. I'd be very surprised if there was any decrease in the book values of corporations. I'd also be surprised if there was even a decrease in the sales volume of corporations.
You have always taught that the successful investor looks for bargains. You must have some bigger bargains than a few days ago, do you not?
Yes, indeed, Louis. You might say that we're being offered a great opportunity. Those who weren't quick enough to get in on the ground floor when the bull market started in 1982 are now being offered a chance to get in on the ground floor of the next bull market.
Your own industry, the mutual fund industry, has had a rocky week, massive redemptions. People told they couldn't redeem for 7 days in many cases. Do you find in your own operation that people are panicking and trying to get out?
Our redemptions this week have been less than 0.1% if switching from common stock funds into others. Overall, with all the funds together, there's been a net increase, not a redemption.
What's your advice to people in terms of the stock market now?
Patience, be a long-term investor, be prepared financially and psychologically to live through a series of bull markets and bear markets, because in the long run, common stocks will pay off enormously. The next bull market will carry prices far higher than this one.
Why?
Because the whole nation is growing more rapidly. Gross national product of the nation will double in at least the next 10 years. We think the gross national product of the nation 40 years from now will be 64 times as high as it is now. And that will be reflected in sales volume and profits and share prices. So that from a long-term investment standpoint, it's a question of when should you put your money into stocks. We can't give you the exact day, but sometime the bull market will start again and you want to be in on it.
Bill Schreyer, in 1974, when we had a pretty bad bear market, instead of being bullish on America, your firm was emphasizing all the other products it had to offer. This time you seem to be much more positively upbeat as a firm. Is there a change in attitude there?
Well, no, I think we just thought it was a very timely, as you may know, we ran some commercials in the World Series last night where Jack...
Yeah, we told them not to play tonight, so...
Yeah, they're going to play tonight, that's right. But nevertheless, we are very bullish on American corporations, and this is a story we're trying to get